I think there is one part of the puzzle that many people are missing, including me until recently: volatility. Everything is always moving, but it doesn't always move the same amount each day, and we can actually see this in real time. Let me show you why I think your trading isn't currently working the way it should. We are currently looking at NASDAQ on a 30-second chart from 11 a.m. to 4 p.m. Up until 1:30, where I have it hidden, we were getting around 5 points of movement on each 30-second candle. This is worth $100 on the minis and $10 on the micros. Ignoring outliers, the most we were really seeing was 8 points of movements on each bar, and the minimum was 2 points. So 98% or so of the time, we could have expected a 30-second bar to move anywhere from 2 to 8 points. This is normal for the NASDAQ right now when I'm making this. You can basically use this as a way of gauging how long you'll stay in a trade. Going for a 1-to-1 risk-reward 10-point trade would probably keep you in anywhere from 40 seconds to a few minutes. Going for 2 points would stop you out pretty quickly. Now, something interesting happened on this day when I was trading. This isn't just a video where we go back in time at something that's already happened and talk about how to trade it. Nope. In real time, I saw a massive candle happen that went 15 points in 30 seconds. But this wasn't like the other times where there were outliers earlier in the day. The next candles were drops in price 10 to 12 points long. So I did the smart thing and went to check for news to figure out what was going on. This was very erratic and unexpected. Now, looking at the whole right side from where this huge volatility increase first began, you can see that the dot clusters are way higher up than before. It went from a 2 to 8 point range to a 3.5 to 12 point range, with many outliers above 14 points. So what does this mean for us? Well, I'll tell you what. That's a bit too volatile for me. When I noticed that the new average was twice as much movement as before, that's when I stopped. Sure, you might have the same trading opportunities, but it's literally trading times 2. The same things are there, but they're going twice as far now. That means twice as much reward, but it also means twice as much risk, twice as many emotions, maybe, sort of, I don't know, certainly scarier. But I like to look at the ATR to see if maybe I should just step back for a sec and let things chill out. It's the same reason why I wait a little bit after the open to start trading. Especially with futures, you could be making or losing thousands of dollars in 20 seconds if you're not careful. Luckily they have micros, but still. Even the micros are moving a huge amount in terms of monetary value when volatility increases, and ATR shows us exactly what volatility is doing in real time. I personally like the dot clusters, but some people like lines like this. Whatever works best, it's all the same information. Now obviously you wouldn't trade pre-market the same way you would trade during normal hours. Looking down below, you can see that most of these candles are ranging from 1 to 4.25 points. Clearly, your stop losses and take profits would probably be smaller, since the chances of capturing a large move are unlikely. I knew that, yet somehow I wasn't being dynamic with my trading style when volatility was different during the day. Moves are way different right now than what they used to be, and I'm not sure all of the traders out there are actually adapting to it. I certainly wasn't. I keep hearing people saying that trading is really hard right now, and part of me wonders if they have changed with the times. Both your stop loss and take profit levels need to match with what's currently going on in the market. The charts always stretch out or become compact to automatically fit on the screen, so we don't always visually see when things are moving up and down more. We don't always notice that the horizontal price bars are moving in much higher or lower increments. Visually, it looks the same. So the ATR helps remind us that things are changing. Price action and structures might always be there, but their peaks, valleys, pullbacks, and breakthroughs change a lot. So our price targets need to match these changes, and ATR shows us exactly by how much. Take a look at this. Remember, this is a 30-second chart and they're moving from 5 points to 14 points each. Look at the candles. This chart looks the same, except these are only moving 2.5 to 7 points each. Make sure your plans are changing too. When price action is half as much as it usually is, or twice or even 3 times as much, are you actually adapting to this and monitoring for it? Are you actually reducing or increasing the size of your stop loss and take profit levels? For me, this has been one of the most significant impacts on my own trading journey. When something that's normally a 5-point risk-reward trade is the equivalent of a 15-point risk-reward trade, no wonder why I'm getting stopped out, struggling with the entries, and so on and so forth. We have to adapt to the changing market conditions in real time each day. and ATR shows you what you need to do. Thank you, patrons, and good luck out there, everybody.